Good morning, everyone. Welcome to Monday, the 23rd of November. Welcome, Ali Khan Sachu, our regular contributor, the CEO and founder of Rich Frontiers Management in Nairobi. Good morning, Ali.
Thank you, boss, for having
Thank
me.
you. Thank you very much. And great to have Onyeka Ijoma as well from Vertical Capital Management in charge of industrial goods analysis. Of course. Thank you, Onyeka. Good morning.
Good morning, boss. It's a pleasure
Thank
to
you.
be here.
It's good to see you as well. Hope we all had a very great weekend. I'm interested in a couple of stories from today, Nigeria's monetary policy we have today, tomorrow to talk about that, maybe until Wednesday. Then the country's GDP came out over the weekend as well, initially scheduled for this morning. But let's check to the African markets. Um, just to give you a sense of where we finished off last week, Ivory Coast market gained 0.14% on Friday. The Kenyan market finished 0.15 on a weekly basis. Egypt finished off 1.08%. South Africa was down. Nigeria was down. Profit taking 2.57%. Let's move on and look with East Africa, with the whole story around the G20. Little progress was made over the weekend. They concluded their meeting, the whole conversation around 3.7 billion US dollars rescheduling for poor countries. Kenya says it didn't ask for debt suspension. I know the jury is still out there. The conflict in Ethiopia is ongoing, but the authorities in Addis says they still continue with the Ethio Telecom's privatization. Rwanda had made very big news, 83% jump in garment exports, despite the face-off with the United States sometime in 2018. And yesterday, Kigali became the headquarters of the Afrexim's new funds for export development in Africa. Thumbs up for the Kagame's administration. And Standard Chartered in Kenya, and that was out of the blues. They're 30.6 billion, 30.6% decline in profit, down to about 4.3 billion shillings. Ali, let's start with, shall we start from Kigali? Welcome a new baby.
Yes, I mean, Kigali has been trying to position itself as a conference destination in Africa. There have been significant investments made, and I think this is confirmation that that strategy of conference tourism is working. I mean, this is a serious win. Afrexim Bank's headquarters for the new funds for exports development in Africa. And bear in mind also, my visits to Kigali, it is probably the safest country in Africa, a city in Africa. And we remember being dropped off by a government minister at 2 in the morning, about 500 meters from the hotel, and telling me, just walk home, Ali, walk back to the hotel. And, I was kind of nervous, but really making the point that it's a very safe city. So significant feather in President Kagame's cap. That strategy, I think, is coming off. And especially given the uncertainty we're seeing around the East African region, post the Tanzanian election, the Ugandan street is on fire, Ethiopia, lots of challenges there as well. Let me jump to Ethiopia. Telecom sale won't be delayed. Of course, everyone's been following the news. It's been very worrying. Ambassador Susan Rice characterized the last comments by Prime Minister Abiy as possible war crimes, where he said civilians should disassociate themselves from the TPLF and that the army was going to encircle Mekele, which is the capital of Tigray province. So it's a big situation. They've also turned down, I think, any African Union mediation as well, and talking of a final solution in 72 hours. I saw comments from Vodacom. I saw comments from a bunch of telecom operators, all of whom would be much more nervous about bidding some of those prices that they were initially showing. So I think you're either going to see haircuts because of this increased political uncertainty, 220 basis points on the Eurobond, or you're going to see some people back off. Ethiopia was the poster child of the African Renaissance, growing at above 10%. I mean, they're going to be negative growth next full year. That's without a doubt. IMF was talking about 1.3 to 1.7%. Kenya, there's been a lot of back and forth on this DSSI G20 debt suspension. There was a report in our paper, the Business Daily, saying that we were going for that. That was rebutted. Now we've learned that Kenya has applied to the IMF for $2.3 billion and a further 1.5 from the World Bank. And the National Treasury is speaking about 1% GDP growth this year. I think Kenya obviously has a fiscal problem, and the question is, are the IMF and World Bank going to pony up and support Kenya through this situation? And I think that becomes not only an economic calculation, but a geo-economic calculation. How important is Kenya seen to the multilaterals, to the Western world? And they remain the people pulling the trigger at the IMF and the World Bank. Standard Chart, profit down through 30.6%. Look, there's been two schools in the Tier 1 banking group. One school has been aggressively marking down and provisioning. Standard Chartered belongs in there. Others have been throwing, I think, a Hail Mary pass, hoping that a vaccine or something comes along. But essentially, Standard Chartered is a very well-run conservative balance sheet, and I think those numbers truly reflect the reality on the ground.
Thank you, Ali. Some of these stories around Kenya's debt, GDP, and all of that sort of mirror what we have here in the West. When you look at Nigeria and West Africa, the country's GDP, third quarter GDP came out over the weekend, 3.6% negative. Of course, everyone expects the recession to happen. 18 sectors against 13 sectors in second quarter in terms of recovery. That sounds like some good news for me. Moving forward, at least now we can begin to put the recession behind us as we move into the fourth quarter of the year. But analysts and everyone will have a whole lot on their minds this week, including the central bank, with the GDP, with inflation, with the November PMI, the bank's earnings, the stock exchange, the stock market rally that we've seen in the last couple of weeks, in particular since September 22 MPC. We've seen this rally unabated, largely speaking, until now that we have the bank earnings last week. Togocell is getting licensed to experiment with 5G. That's what the telecom operator in Togo says. $520 million from ECOWAS to boost regional fertilizer industry. That's an industrial production. We need that very quickly. And within the UEMOA's monetary region, Republic of Benin says it is able to raise 22 billion CFA franc. Let's get your sense into the Nigeria space, Onyeka, with the third quarter GDP and some of the sectors that the news is no longer that we have a negative GDP. Everybody saw that from Q1, as it were, speaking. So that's not the news. What is the news is that we're seeing some sectors making recovery. Is there a likely a negative or perhaps a positive reading for Q4?
It's a tough question to answer, but I guess the quick answer would be probably not likely. At the moment, Nigeria recently entered. We entered another recession, second quarter of contraction. So technically in a recession. But the big news is that we actually the contraction fell in the third quarter. From around 6.1% in the second quarter to around 3.6% contraction in the second quarter. So we were also seeing some, smaller contractions in some of the industries. Manufacturing, for example, we saw contraction fall to 1.5% from around 8.8% in the second quarter, and this was largely driven by improvements in food, beverage, cement production. I mean, we've seen cement production surge in the third quarter significantly as real estate developers have been taking advantage of low interest rates to push through on some developments. We've seen the government also push money into the public infrastructure into public infrastructure projects in the third quarter. Food, beverage, and tobacco production has also increased, largely due to easing of social distancing measures, which have allowed people to sort of hang out. A lot of our food consumption tends to take place in social gatherings in Nigeria, in Lagos especially, where we have the party, the Wampe culture. We tend to see these things, drive food, demand for food and beverage, consumption. So we've seen that improve. We also saw the construction sector improve. We saw the from about a 32% contraction in the second quarter to around a 3% growth in the third quarter. Trade has also the contraction in trade has also reduced, even though it's still in double digit terms. But places like information and communication, ICT sector is still growing, significantly, double-digit growth, as we continue to move to a more digital economy due to social distancing guidelines and all. And it's all this seems like it's a positive trend from the second quarter. And the question is, are we going to turn positive in the fourth quarter? I think that there will be further improvements, but we are unlikely to turn positive in this fourth quarter. This is because we still have some significant challenges facing. We still have some significant challenges facing us. In terms of international trade, we are still not back to full capacity. We're still dealing with high levels of inflation, which is further squeezing consumer disposable income, which creates a drag on aggregate demand. And then there's still increasing risk of there's still a strong risk of currency depreciation. About last week, even as the USD NGN has stabilized in the parallel market for like the past 2 months or so at around the 460, 465 levels, we saw further depreciation in the parallel markets just last week. There were reports of people exchanging USD NGN for around 580, while Aboki FX for around 520 naira to the US dollar, while Aboki FX currently has it at around somewhere between 480 to 485 naira per US dollar. So basically, we're still seeing pressure on the NGN. The World Bank loan seems like a wistful dream at this time, for the which further reduces the CBN's armory in terms of fighting this depreciation, and in terms of the government's policy stand, the government's current protections stand, and their stance to continue to maintain the official market rate, the official currency rate at this point. We are going to continue to see pressure on the NGN. We are entering into 2021, where the AFCFTA is largely expected to resume. Is largely expected to come into full force. At that point, we should start seeing increasing demand for FX, from the Nigerian populace as we look to import from other countries. We expect investors to start preparing orders before then, and putting further pressure on the USD in the coming months. So this combined with these little mild insecurity challenges and logistics inefficiencies we saw in Q4 just puts a huge it just dampens the positivity around Q4 GDP growth. And it just makes it a little more unlikely that we are going to see a positive trend in Q4, in the first quarter of 2021, in the second quarter of 2021, and maybe until the second half of 2021 we start to see some more positive leanings and all.
Okay, full recovery. You said the pass until second half of next year, until at least we win out this entire contraction period. return to zero level, they begin to climb higher from there. But again, a whole lot of things need to happen in between. It's still a whole long way. If you're looking at second half of next year, that's technically 9 months from now, in a manner of speaking, if everything go well without any major shock, both externally and internally, as we know it. Thank you, Onyeka. Let's touch on with the Southern Africa, and it wasn't really good news, as everyone knows, that Fitch and Moody's downgraded South Africa, and a whole lot of news around that over the weekend. Tito Mboweni came up and spoke about what this means for South Africa. Some news that the Ramaphosa administration has been able to pull at least almost half of the 100 billion US dollars outlook for the next 5 years in terms of investments. What that means for this industrialized economy moving forward is anyone's guess. The South African court ruled over the weekend 215 oil sale of 10 million barrels from the reserves was invalid. That's an internal issue. They've got to deal with it. Pepco has a new chief on the board, Wendy Lohabe. Santam is running into some problems, as it were, with insurance claims. So he ran to the courts and asked the courts to help settle issues with the clients, as it were. I think this all relate to COVID-19 lockdown insurance claims. And Angola got a breather on Friday, 6.7 billion days repayments deferred by China. Ali, let's get on with this Moody's Fitch ratings.
Look, I think, boss, on the downgrade of South Africa by both Moody's and Fitch on Friday night was not a surprise. I think, this has been telegraphed, and the markets, you saw the very subdued reaction in the Rand. So that tells me that people had largely priced in this downgrade. Today, South African ratings are on par with Brazil and 3 to 4 notches below Mexico. But, essentially the market seems to be treating the Rand and the Mexican peso on par. So it's quite an interesting development. Tito, as you mentioned, was quite forthright in making a number of comments. He upset people less about his comments about the ratings agencies than his request for advice on what to do with South African Airlines, about which everyone was very unhappy, including the unions. Look, we know what the situation in South Africa is. It has been in negative per capita growth now since 2012. They are still dealing with the malfeasance of the Zuma era, which is another story of yours, I think, regarding the sale of 10 million barrels from the national reserves. And, they really need some kind of catalyst to return to growth. The question is, where will that catalyst come from? And essentially, they are quite interconnected with the global economy, most interconnected economy in Africa, if you look at exports and imports. And I think really, if you're betting on South Africa, you're betting on this return to faster growth globally, which then pulls South Africa in the slipstream. So let's hope for the best. I'll just jump to your China story about Angola. Yeah. This has been a subject of a lot of debate, a lot of announcements saying, yes, we've deferred it. We haven't had complete confirmation that that's happened, but we're seeing a lot of pressure build in the pressure cooker of Luanda. I mean, the people have been on the streets now for a few weeks. There's been a lot of unhappiness. Debt to GDP, something like 120%. The Kwanza, I think the second worst performing currency after the Kwacha. So, President Lorenzo needs to catch a break. It would be very helpful if China now come forward and say, yes, we're going to defer it. And they probably need a deferral for longer. They need it for about 2 years, I suspect, to get back on track. But a lot depends in Angola on the price of oil. And it's got a little bit more bright-eyed and bushy-tailed, but it will all depend on the vaccine story, I think.
Mm. Interesting when we take on North Africa and you talk about the IMF loans that Kenya is talking about. Look at Egypt. IMF came up with a very strong statement on early Friday, disbursing another $1.6 billion to Egypt under the $5.2 billion program. It looks like IMF will go wherever Egypt wants to go. The Central Bank of Egypt was well commended for its monetary policy so far, an exchange rate situation. Egypt Gas is listing capital raising on the stock exchange. Orascom investment, 53% year-on-year net loss to nearly 40 billion Egyptian pounds in the 9 months to September. Morocco inflation up by 1.3%. Food index still up. Uh, and then this consumer healthcare IDH listed in London, say wants to list also in the Egyptian stock exchange. That's quite a very curious one, but it also gives a lot of sense to the fact that the Egyptian market is a place to go. Well, let me just give a quick one to Onyeka to give me a sense of we're starting a brand new market week in Nigeria this week with the monetary policy meeting on the card. What's your take at Vetiva Capital?
Okay, thank you for the question, Boston. First off, for the markets, the equity capital markets, we expect that the first 2 days will trade a little more cautiously. We've seen a lot of gains. We've seen a lot of gains in the past 2 months or so. The market has rallied significantly since the last MPC announcement. Since the last MPC meeting, and last week we saw a bit more of profit taking as investors, basically started to take profits on some counters that had gained, significantly. This week we expect a bit more stability. We expect the first 2 days to trade a little more cautiously, though, as they await the outcome of the MPC election to give them some guidance. But on the MPC meetings, at the moment, I wouldn't want to be in the position of the CBN governor. Basically, you have two very differing problems: problem of price stability, the problem of exchange rates, the problem of price stability, problem of exchange rate stability, and the problem of economic growth. At the start of the year, it seems that the CBN was largely favoring economic growth, but at this point, we think that their focus right now is just on keeping interest rates and borrowing costs low for the government, seeing as international borrowing options seem to have basically fizzled out, for now, and so we expect that they will be trying to balance the need to raise interest rates to sort of manage the rapidly rising inflation, raise interest rates to sort of appease FPI investors in the exchange rate market and keep the exchange rate more stable, and also reduce and also keep rates at this particularly low point to manage their borrowing costs and also to support economic growth. How they are going to balance it is going to be a tough one, but basically I expect that they'll take a do nothing approach and see how far their last policies is going to take them, at least for the next 2 months before they make another decision.
Mm. Okay, Ali, wrap up the North African markets for us with what the IMF is doing with Egypt and all of that. Looks like the show of confidence and the side of confidence keep getting much bolder by the day.
Absolutely. I think, we've been talking about this for a few weeks, that the Egyptian authorities, the financial authorities, have been getting a vote of confidence, not only from the IMF, EBRD, European Investment Bank, you name it. They're throwing money at Egypt in a way most African countries would be pretty excited about. But I think that speaks to the bureaucracy and the financial bureaucracies joined up thinking, and therefore it gives tremendous confidence to these big multilateral institutions, and this is confirmation of the same. Just to touch on a couple of things: Egypt Gas to list capital increase shares on Egypt, EGX. That's all about these gas discoveries that they've had recently. And then finally, Morocco CPI. There you see the food index ticking up a little bit, 2.7%, but still pretty benign. And this has actually been a phenomena in this downturn, which has been very helpful for African countries, and food prices have remained, frankly, under control.
Interesting. Thank you so much, Ali. We appreciate that for wrapping up the show for us on the north of the continent. Thank you, Onyeka Ejema from Vertebra Capital. And once again, Ali from Nairobi Rich Frontiers Management. Thank you, gentlemen. It's a Monday. Let's get down to the business week. See you again. And thank you very much here on Frontier Africa Reports. Bye for now.